Do you really understand the costs of waiting to buy a property here in Brisbane? In this video, we're going to unpack the true cost of holding out on investing or buying your own home in Brisbane's property market and how much it actually might cost you. Now, I hear time and time again about people thinking of waiting for prices to drop. I've heard this from COVID, I've heard this from the 2015 period, 2010s. There's always people waiting for a price drop or waiting for a big price correction. Now, don't get me wrong, property prices won't infinitely go up forever. There's going to be years of 10% growth or 10% falls or stagnation in between. But over the long term, these hard assets are going to continue to grow. So are you thinking of waiting for prices to drop? Let's take a look at what the data says. So as you can see, we've got a photo here of Brisbane, the city or the Brisbane region. What has the data looked like over the most recent months and years? As you can see here, over the last 3 months, Brisbane has grown by 3.4%. Now that's massive in a 3-month window. So we're growing over 1% a month at this point in time. And with interest rates potentially being cut, could this growth speed up in the near future? The annualized growth over the last 12 months has been 12.2%. So getting over 10% in a 12-month window. Since 2023, the Southeast Queensland market has grown by 27%. And if you took action around COVID, since the COVID slump, property prices have grown a whopping 55%. And so based on that historical growth, you might be thinking, the market can't grow anymore. There's no possible way. Housing is unaffordable. Houses that were 300,000 are now 600,000. Other houses that were 600,000 are now $1 million. There's no way they're going to go to 1.1, 1.2. And that's what our parents said. That's what the previous generation said about house prices when they were tens of thousands of dollars and then became hundreds of thousands. The reality is the RBA and the Australian government is going to keep spending on jobs and infrastructure. They're likely to keep migration high from overseas. And so if we have all of that take place, the money printing is going to flow back into these hard assets and we're going to see property continue to rise. So what is the hidden price of waiting to buy a property? How much is it going to potentially cost you and send you back to your day job just to break into the market in say 1, 2 or 3 years time? Let's look at an example scenario. So if you purchased or wanted to purchase a $900,000 house right now and it grows by 6% per annum over a 3-year period, that property would then be worth $1,070,000 by 2027. And so that's growth of $170,000 more. Now imagine you're earning $80,000 a year, and then you've got to take out your lifestyle and living expenses and school and fees and rates and council and internet and subscriptions and all those things. And then with your savings left over, you've got to try and pay for that. That's where property continues to compound year on year and why I don't think you should wait to try and break into the market. You're also missing out on equity, which is really important to continue to grow an asset base. Equity allows you to leverage off the value of your current assets to go and potentially grow your asset base to buy more assets and hold a bigger property portfolio. Now, the other side of the equation is the cash flow. We're also seeing compression on rental yields. And so we've got rising rental prices, and this is also potentially missed income if you were to become a landlord. In my opinion, you should probably rent yourself a cheaper place and buy investments to continue to grow and build your asset base. You can see that vacancy rates in Southeast Queensland are sitting around that 1% mark, and rents have continued to climb around 4% per year. And so you're getting increase in both the asset values and the rental values. And so if you're sitting on the sidelines thinking that the market's going to tank, then I think you're missing out on the opportunity for this year-on-year compounding growth, both on the equity side and on the rental side of the equation. Some other key factors to consider is what else you're missing out on if you're not invested in this market. And so as we were mentioning, the rental income is cash flow. It's your ability to service assets. And the idea is that the rent is not going to completely cover properties at the moment if you've got 80% debt, but it will pay for a large portion of your investment asset. And so let's say you're negatively geared $15,000 or $20,000 a year on the property. The tenant is paying a large portion of that and you're just paying the remaining difference to hold this asset. You also need to think about the tax benefits. If you're a higher income earner who pays 30 cents or 47 cents in the dollar of tax, there's significant benefits, including depreciation and negative gearing, that exist at this point in time. And we still have the 50% capital gains tax discount if you do own a property for more than 12 months and then sell it down the track. Finally, there's the leverage piece, which I think is the most important. Leverage allows you to use other people's money or the bank's money to hold and grow a property portfolio. And so it's very difficult for people to get access to this, but if you can work with the brokers and the banks to secure the right deal and then continue growing the asset base, leverage is a key component to building that property portfolio. Now, when we look at investing in real estate, property is a game of supply and demand. What we're seeing on the ground as buyers agents here in Southeast Queensland is there is a lack of supply. There's not enough houses for the amount of people wanting to live in the greater Brisbane region. But on the other side of the equation, demand is also increasing. And so the numbers tell the true story. There's been over 100,000 people that have moved into Queensland in the last year, and that's including overseas and interstate migration. And there is billions of dollars being spent in infrastructure projects for the 2032 Olympic Games. They're planning on doing new stadiums, railways, road upgrades, smaller venues. There's so much money being spent on jobs and infrastructure that is also bringing people into this Southeast Queensland market. So the question you need to ask yourself is, should you wait? Should you sit on the sidelines based on the supply and demand metrics, based on the potential annual compound growth and the benefits of investing in assets like property? Should you wait and sit on the sidelines? This video is not to scare you. It's not to fearmonger around the potential growth of property prices. It's to give you a realistic view of what's happened in the past. What have the past growth rates been like over property? Now, I'm not saying we're going to have another COVID boom. That's not the case. But if you look at the long-term growth averages of Southeast Queensland, most of the data houses will say that Queensland over a 30-year period has grown around 8% per year compounding. Now, it's not a straight linear 8% every year. It's not nice and neat. You'll have some years where it's 15%, some years where it's 1%, or even -5 or -10% in a really bad year or a slump. But the truth is that over a long-term time horizon, that 30-year window, growth has been around 8%. And I like to run my numbers as a chartered accountant and a property investor myself around that 6% mark. And so even if you're looking at a more conservative 5 or 6%, the compounding return of investing in property is why I invest in this asset class, is you're getting compounding growth on a higher asset value. And if you can control $1, $2, $3, $4 million worth of property, if you get 10% growth on a $4 million asset base, that means you've made $400,000 of equity that you don't have to go to your day job for, and you don't have to go and save after you've cut out all your living and lifestyle expenses. Now, I run a buyer's agency based in Southeast Queensland, and we help people break into the property market here in Greater Brisbane, covering 6 council areas, from Caboolture down to the Gold Coast. But I say this in most of my videos is that you don't need a buyer's agent, you need to take action. If you do want to work with myself and the team, head over to purposeproperty.com.au to book in a free chat with myself. The biggest thing for me is that you look at your finances and your strategy and you take decisive action from there. You need to go to a broker or bank and confirm your borrowing capacity and your ability to continue buying multiple properties over a long period of time. Generally, I start with your main tier banks like your CBAs and your ANZs and Westpacs, and then you look to borrow from second or third tier lenders to extend your borrowing capacity. Once you know you can borrow $1 or $1.5 million, you then need to strategize. Should I buy 2 assets? Should I buy one higher price asset? And how am I going to fast track this journey to continue growing the asset base? It's the reason so many clients sign up to our business at Purpose Property. It's because of my chartered accountant background, because my personal portfolio sits around $9 to $10 million, and we've got a specialized team that focuses just on this Southeast Queensland market. So I would encourage you, based on the growth rates and based on long-term investing decisions, I think the cost of waiting to buy is very expensive. I'd love to hear your thoughts in the comments below, and give this video a click over here for more things real estate, renovating, and financial freedom. I'll see you in the next one. Peace.